Hello everyone, welcome to another tutorial where we will be solving Principle of Accounts paper from May-June 2012. Let's get started. Multiple choice 1. Which task would not be carried by an accountant? So the focus is on not, as you can see, it has been bold. So which task is not carried by an accountant? Comparing 1 year's results with those of previous years, yes, this is a job of an accountant. Interpreting the accounting records, this is also a job of an accountant. Preparing financial statements, this is the key responsibility of an accountant. Option D, recording the financial transactions. Now this is a job of bookkeeper. This is a job of bookkeeper. This is arguable. You can say that an accountant can also do that, and he should or she should know how to record journal entries or financial transactions. But multiple choice is more about choosing the best option, and in this case, this is the best option. This job is done by a bookkeeper. Therefore, the correct answer to multiple choice 1 would be option D. Multiple choice 2, Jane made a payment to a supplier for goods bought on credit. Jane does not have a bank overdraft. What is the effect on the accounting equation? So you remember, accounting equation is asset equals to liabilities plus equity. Jane paid the supplier. If you prepare a journal entry for this, it's going to be like this: accounts payable debit, because that's a decrease in liability because Jane is making a payment to the supplier, and then credit cash or bank, that is a reduction in assets. So if you remember your debits and credit rules, you can easily make this journal entry. So you are going to look through the options. If you see decrease in liabilities, that's accounts payable, and then decrease in assets, that's cash. Therefore, the correct answer to multiple choice 2 would be option B. Multiple choice 3. Anna keeps a full set of accounting records. Goods purchased by Anna from Winston were returned before they were paid. So Anna returned goods to Winston. Anna returned goods to Winston. So that is basically a purchase return. This is a purchase return. Where will Anna record the return of goods? She's going to record it in general ledger plus the purchases ledger. So the correct answer to multiple choice 3 is going to be option C. Multiple choice 4. What is true about statement of account issued by a business? So statement of account is basically a summary of financial transactions. It's a summary of financial transactions. And if you have been following my videos on these past papers, you would see that statement of account has been tested in several different ways in each year. Statement of account is seemed to be a favorite topic of examiners here. So you should know what statement of account is. So let's look through the options. Which is true? Which statement is true? It is a source document for the purchase journal. No. It is a source document for the sales journal. No. It is sent by a customer to a supplier. No. It is actually sent by a supplier to a customer, and that's there. Option 4. So therefore, the correct answer to multiple choice 4 is option D, 4 only. Multiple choice 5. Hasina buys radios from Nazneen at a list price of $10 each. Hasina bought 12 radios and was offered 20% trade discount and 4% cash discount. 2 radios were faulty and returned to Nazneen. What was the total of the credit note issued by Nazneen? So credit note is issued when you return goods. Credit note is only issued when the goods are returned. So when Hasina returned goods to Nazneen, Nazneen will issue a credit note. So 2 radios were returned, which had a list price of $10, and there was 20% discount on them. So you will get this as $4. 20 minus $4, that's $16, right? Therefore, the credit note would be of $16. The answer to multiple choice 5 would be option B, $16. Multiple choice 6. A trader posts the total of her purchases return journal to ledger at the end of each month. On 30th April 2012, the purchases return journal showed the following totals. Which entry should be made in the purchases return account on 30th April? So you need to understand the nature of purchases return account first. Because if you look through the options, there is debit and credit. So if you understand the nature of the purchase account, you can eliminate some options. Nature of purchase account is actually a credit nature account. It's a credit nature. It would have a credit normal balance, a credit normal balance. What's happening here is you return goods, company return goods. That's a reduction in inventory. And what's inventory? Inventory is an asset account. When our asset decreases, that's credit, right? That's credit. So you can immediately cross out option C and D. Now you're only left with option A and B. So if you look through the amounts, you take the net amount of 960, and therefore the correct answer to multiple choice 6 would be option A. The purchase returns account on 30th April 2012 will have a credit balance of $960. The correct answer to multiple choice 6 is option A. Multiple choice 7. On 1st January, Sudeep borrowed 15,000 from the bank at an interest rate of 8% per annum. On 1st August, the loan was increased to 24,000. How much interest was Sudeep charged for the year ended 31st December? So you need to calculate interest expense for 31st December. And if you look through the dates are very important in here, and the amounts, they change. So from 1st Jan to 31st July, interest expense is going to be 15,000 times 8% or times 7 over 12. That will be the timeline. And this will give you some X dollars of interest expense. And then from 31st July to 31st December, the loan amount was 24,000 times 8% times 5 over 12 will give you some X dollar amount. You need to sum them up, these two amounts, and that will be your total interest expense. So I will do the maths by myself, and you should do it by yourself. You should calculate these X dollars over there by yourself. Simply the reason is to get you practice. The idea here is to get you practice, just not watch the video, but also to practice. If you practice, accounting is about practice, it will enhance your understanding. So if you do the maths, if you do the calculation in here, you should arrive at the total interest expense of 1,500. So therefore the answer to multiple choice 7 is option B. Multiple choice 8. On 31st March 2012, Ahmed's bank statement showed a credit balance of 2,500. Okay. Ahmed found that a check issued for $90 and a deposit of $500 had not been included on the bank statement. So bank statement missed a deposit of $500 and missed a withdrawal or the payment of $90. What was the balance at bank shown in Ahmed's cash book at 31st March 2012? So in his cash book, this 590 would have been recorded accordingly. So you need to take this balance 2,500, 500 plus, add the 500 because that's a deposit, and then minus the 90 because that's a payment that has been made to a supplier or to anyone. And then this will give you 2,910. So 2,500 plus 500, 3,000, 3,000 minus 90, 2,910. Therefore, the correct answer to multiple choice 8 is option C. Multiple choice 9. Which item is recorded in the journal before it is entered in the ledger? So general. Bad debts written off. Yes, this is the answer to multiple choice 9 is actually option A. Journal. It records adjusting entries. It records adjusting entries, and when the company writes off bad debts, that is considered as an adjusting entry. This is an example of adjusting entry. Therefore, the correct answer to multiple choice 9 is option A. Which account could have a credit balance? So this is asking about possibility. Could is basically about possibility. Which account could possibly have a credit balance? This is again option A, and the answer to multiple choice 10 is option A. Bank can have a credit balance if there is a bank overdraft. If there is a bank overdraft. So therefore, the answer to multiple choice 10 is option A. Multiple choice 11, what is a trial balance? Again, the answer here is going to be option A. A trial balance is a list of balances remaining on the books of business at a certain date. If you look at the trial balance is basically a list of balances. It gives you balances of different accounts at a certain date, at a closing date, or whatever the financial year end is. So therefore, the correct answer to multiple choice 11 is option A. Multiple choice 12, which is an error of omission. Error of omission is when you completely ignore the transaction, completely did not record the transaction in the book. So let's look into the options. Rent paid in cash, not entered in the rent account. So not entered in the rent account, but there's an assumption here that entered in the cash account. So it has been entered in the cash account, but not in the rent account. So it's not been completely omitted. Therefore, A is not the right answer. Rent paid, not entered in the cash book or the rent account. This sounds right. So therefore, the answer to multiple choice 12 is actually B. This has the entry has been eliminated. The entry is not recorded. Entry is not recorded in the cash book or the rent account. So it has been completely omitted. Therefore, the answer to multiple choice 12 is actually option B in this case. Multiple choice 13. John's financial year ends on 31st December. He pays his annual insurance premium on 1st July. He provided the following information. How much was transferred from insurance account to the income statement for the year ended 31st December 2012? So you need, as I said, you need to pay attention to the dates here. You need to calculate the insurance premium expense at 31st December 2011. So let's look what has been done. So insurance premium paid on 1st July 2012 is 2,400, and then insurance premium is paid on 1st July 2012 for 3,000. So basically half is for 2010, half is for 2011, and in this case half is for 2011 and half is for 2012. So we need to add these halves here together for 2011 expense. So 2,400 times 0.5 is 1,200, and then 3,000 times 0.5 is 1,500. The total is 2,700. The correct answer to multiple choice 13 is option B, 2,700. Multiple choice 14. Raminder maintains a provision for doubtful debts of 2.5% of trade receivables. So this is a question on provision for doubtful debts, which has a rate of 2.5%. On 1st January, the balance on the provision account was 1,075. The trade receivables at 31st December amounted to 41,000. Which entry will Raminder make on 31st December to adjust the provision for doubtful debts? So the allowance account, if you're not clear on this concept, please do watch my video on the allowance account, where I have discussed how to make allowance calculations and the journal entries. So allowance is a contra asset account. It will have a credit balance forward of 1,075. We will need to calculate the closing balance, which will be 41,000 times 2.5%, and that comes to 1025. So this should be your closing balance. This should be your closing balance. This should be your closing balance 1025. The entry will record the change. The entry will record the change in the provision. So what's the change? 1075 minus 1025. The change is $50. Is it upward or downwards? This is a downward. This is a reduction of $50 in the provision, right? This is a reduction in the $50 of provision. Therefore, if you go through the options, a reduction is going to be an income. So therefore, a credit to income statement. The correct answer to multiple choice 14 is actually option C. Multiple choice 15. A company purchased a new computer system. What would be recorded as a revenue expenditure? So revenue expenditures are expenditures which occur on frequent basis, or they do not add significantly to assets life. So you must read what revenue expenditure and capital expenditure is. You must understand it. This is just a quick revision in here and how to attempt multiple choice in the exam. So if you go through the options, purchase of computer hardware, this is going to be a capital expenditure. Computer software, this is going to be a capital expenditure. So for example, Windows is a computer software. You need Microsoft, you need Windows, which is an operating system to run the computer. That's a computer software, therefore it's a capital expenditure. Ink cartridges, yes, this is a revenue expenditures because you use them, you run out, and then the business has to buy again, right? So that's a revenue expenditures. It's going to occur on frequent basis. We cannot capitalize it as capital expenditure. Therefore, the correct answer to multiple choice 15 is going to be option C. What is depreciation? The answer to multiple choice 16 is actually D. If you just run through, you will immediately understand why it's D. It's a system of matching the benefits of using non-current assets with its cost. So basically, that's what depreciation is. It's wear and tear and expense which occurs because of the use of the asset. So this is defining wear and tear, but it's defining it in accounting terms. So you need to understand the language. Accounting is a business language. It's just like another language. So you need to understand that. The more practice you do, the more understanding you will get. Multiple choice 17. A machine costing 16,000 is depreciated by 25% per annum on reducing balance method. What is the depreciation charge for the second year? So not the first year, the second year. So do not mistake this one. You have to record the depreciation expense for second year. You have the cost of the asset. Cost of the asset is 60,000. This is the rate of depreciation, 25%, and this is the method of depreciation, which is reducing balance method. So year one, your depreciation expense is going to be 60,000 times 25%. And let's call it X1, and you will calculate the amount because you need to practice. And then for second year, you will take the net book value, which would be 60,000 minus the X1, the depreciation expense for year one, times the 25%, and that will give you the depreciation expense for X2. You need, this is what question is asking. That would be your answer. That would be your final answer. So if I just run the numbers, if I calculate it on a calculator, the answer should be 11,250. The correct answer is option A to multiple choice 17. Multiple choice 18. Lisa's trial balance failed to balance and a suspense account was opened. It was found that the return of goods by 20 return of goods $20 by Zafar, a customer had been correctly entered in the sales return account, but had been incorrectly debited to Zafar's account. So this should have been credit, but it has been incorrectly debited to Zafar's account. So this has been multiplied by twice, $40. So if you just run through the options, you can actually eliminate option A and B, because the question is asking you which journal entry corrects this error, right? So option A and B is going to be eliminated because the amount has to be $40. The correction is going to be for $40. If you look at option D, now this is 50-50, right? This is 50-50. If you look at option D, Zafar has been incorrectly debited, so it cannot be option D, it has to be option C. So simply by elimination of choice, you correctly come to the conclusion, you correctly come to the answer, the correct answer, that is option C for multiple choice 18, without actually looking at the logic. So sometimes elimination helps if you know how to do it correctly. And I hope through this video, you can learn how to use elimination of choices in your exam paper. Multiple choice 19. What would be entered in a purchase ledger control account? So if you know what items go into purchase ledger control account, you would immediately come to an answer of option D, returned outward. All these other options, this is not included, and this is actually sales ledger control account. So if you just go through the options, it's actually option D, returns outward. It occurs when you as a purchaser receive faulty goods and you have to return some goods to your supplier, returned outward, and that will be recorded in the purchase ledger control account. The correct answer to multiple choice 19 is option D. Multiple choice 20, which statement is correct? It's actually again option D, 20 option D. So if you know the formulas for income statement, you will again understand this this multiple choice very immediately and come to the right answer very, very fast. Multiple choice 21, when might goodwill appear in a balance sheet? Goodwill only appears when it's purchased. So if you look through the options, it's option B. The answer to multiple choice 21 is actually B. A trader provided the following information. What was the capital employed? So you would use the classic accounting equation, that is asset equals to liabilities plus equity. So you will first identify the liabilities and then you calculate the, first identify the assets and the liabilities and then calculate the equity. So this is an asset, this is an asset, this is a liability, and this is a liability as well. But this is not taken into account for capital employed because there are two options. There are two options to finance company. So the two options in capital employed are debt financing, that is loan, non-current liability, or shares, that is equity, right? That is equity. So you do not take this into account. You do not take this into account. You need to calculate the capital employed. So this is 37 minus the 9. 37 minus 9 gives 28. So the correct answer to multiple choice 22 is option B. Multiple choice 23. At the end of his financial year, Tom owes $150 of rent. So Tom has to pay $150 of rent. How will this adjustment for this amount affect Tom's financial statement? Because he has to pay, there is an increase in liability. There is an increase in liability. And also, if you go through the options, it's only assets and liabilities and expenses. There is also an increase in expense because Tom has not paid it yet. So he has to pay it. This is an expense. Rent is an expense. So increase in an expense and increase in a liability. If you see option A, it talks about current assets, so you can eliminate that. Option C again includes current assets, so you can eliminate that. Look at option B and D. B is incorrect because that's decrease. That's incorrect. There's going to be an increase in expense, an increase in current liability. Therefore, the correct answer to multiple choice 23 is option D, increase in expense and increase in current liabilities. Multiple choice 24. Amina and Sabina are in partnership. How is the interest on drawings recorded in the ledger? Interest on drawing appears in current account, and it appears on the debit side. So if you know this, if you know what current account looks like, and where interest on drawings go, you will immediately come to an answer, and that's option D. So the correct answer to multiple choice 24 is option D. Multiple choice 25, which would appear in a receipts and payment account. So receipts and payment account is basically the cash flow statement of normal business. This is a term used for club accounting. So if you look through the options, it's actually option B. Donations are the receipts. So the correct answer to multiple choice 25 is option B. Multiple choice 26, a trader does not keep a full set of accounting records. How is the profit for the year calculated? Closing capital less operating opening. So closing capital less opening capital less capital introduced plus drawings. Yes, this is correct. The answer to multiple choice 26 is option A. You will take the closing capital, which is capital at the year end, minus the opening capital that was available at the start of the year, minus the capital that you introduced initially at the start of the business, and then you add back the drawings, right? This will give you the profit for the year ended. So the answer to multiple choice 26 is option A. Multiple choice 27, a manufacturing business provided the following information. What was the prime cost of production? So prime cost is basically direct cost or the total of direct cost. So if you look at the options, the first three costs are the prime cost. Simply just add them up, 35 plus 6, 41. The answer to multiple choice 27 is option A, $41,000. So the prime cost is $41,000. Multiple choice 28, Anne works 40 hours and is paid $5 per hour. She pays income tax at 20%, national insurance at 10%, and pension contributions at 5%. What is her gross pay? So we need to calculate the gross pay. Gross pay basically means pay before taxes. So our gross pay is actually going to be 40 hours times $5 each, which comes to $200. And the answer is option D. The answer to multiple choice 28 is option D, $200. Multiple choice 29, a trader provided the following information. What was the rate of inventory turnover? If you remember the formula for rate of inventory turnover, that's cost of goods sold over average inventory. How do you calculate average inventory? That's opening inventory plus closing inventory divided by 2. So opening inventory is 15, closing inventory is 10, divide by 2. This will give you the average inventory, and then divide by cost of goods sold, which is 35,000. That's your cost of goods sold. So 35,000 divided by the average inventory. You do the maths in here, you do the calculation by yourself to practice. When you do this, it's better for yourself. Trust me on this. And then if you do the maths correctly, the answer to multiple choice 29 is going to be option B, 2.8 times. Multiple choice 30, loose tools are shown in a balance sheet at valuation. Which accounting principle is being applied? So if you have been following my series on these paper 1, accounting paper 1, they always ask you a question on accounting principles, and it usually appears on these last multiple choice because they're kind of difficult, or let's say a little bit tricky. Now, this is talking about valuation. And if you go through the options, consistency is not the right. This has nothing to do with valuation. Actually, consistency is about you're applying accounting principles consistently. Going concern has nothing to do again with it, because going concern is when businesses assume that they are going to operate in the next financial year. Materiality, yes, that sounds right. And prudence is again not the answer, because prudence basically means that accountants have to be conservative. They have to record losses in advance, and they cannot recognize revenue unless they have earned the revenue. So the answer to multiple choice 30 is actually option C, materiality. That has to do with the valuation. So the correct answer to multiple choice 30 is option C. I hope you guys found this video helpful. Please give it a thumbs up if this video was helpful to you. Please feel free to share this video among your friends. Please feel free to subscribe this videos for more accounting videos. And that would be a form of encouragement to me to make more such videos. Thank you very much. Hope you enjoyed, and like.